Welcome to The Debate. Our discussion today is rooted in a really fascinating juxtaposition of two commercial property listings in central London. Now, while both are framed as premium office spaces, one in Mayfair, one in Holborn, they reveal fundamentally divergent philosophies on what truly constitutes, superior business value in the 21st century.
That's right. When you put the Bolton Street listing next to the one on Red Lion Street, you're essentially forced to confront the central question for any modern business. Does your value come from an unassailable location and historical prestige, or does it come from comprehensive amenities, flexibility, and contemporary design?
And I'll argue that in the high-stakes world of central London real estate, prestige and location are, they're non-depreciating assets. They define lasting corporate value, and they absolutely justify the price premium we see in Mayfair.
And I'm going to argue that the whole calculus has shifted. For a modern business, flexibility, employee welfare, and real utility offer a much better competitive advantage. I think the Holborn listing provides a better total return on investment.
Well, my position is that the Bolton Street Mayfair property, it offers an irreplaceable value proposition. It's rooted in global brand equity and history. The listing is marketed as Prime Mayfair. It's in a period property with a prestigious address. This isn't just functional space, it's a declaration. And crucially, the historical context, it was once the home of Winston Churchill. That lends an immediate, profound gravitas that, frankly, no amount of free yoga can replicate. It's an immediate differentiator.
See, I have to challenge that premise, the idea that historical weight equals superior utility in today's market. I mean, the prestige is undeniable, sure, but the Red Lion Street property in Holborn offers a far more compelling utilitarian value proposition. It directly addresses the needs of the modern workforce, especially when you factor in its significantly lower price point, £360 per calendar month, which we must assume is per desk.
Per desk, yes, we have to assume that's the pricing structure given the context.
Right. So at that lower price, the material lists these highly specific employee-focused amenities that are frankly essential retention tools now. Weekly breakfasts, monthly massages, regular socials, free yoga, even bike storage and showers. The whole package is positioned as a commuter's dream. So, Mayfair is selling a name, Holborn is selling productivity and wellness.
But are you suggesting that amenities are a replacement for a fundamental strategic location?
I'm suggesting they are now a fundamental component of strategic location. I mean, this Holborn property, it was newly refurbished to a stunning contemporary interior design, and it prioritizes operational agility. The fact that it includes co-working space, hot desks, and flexible terms in a thriving business hub, that delivers a measurable return on investment. You get better employee engagement, you get reduced attrition. And I think that far outweighs the intangible benefit of a historical postcode. You're paying a premium for an address that doesn't actually improve your internal operations.
I see the financial logic you're trying to construct around retention, but let's delve deeper into what defines premium value. The Mayfair address is inherently premium because its worth is fixed, it's universal, and it's instantly recognized in any global capital market. It's the ultimate signal of established success. And that Churchill connection, it's not just a footnote. It suggests a lineage of stability. I maintain these intangible, fixed assets are categorically superior to what I would call transient employee benefits. Benefits that, let's be honest, are often the first things cut in a downturn.
Okay, but I have to push back, and push back strongly on the idea that wellness amenities are transient. That, I think, shows a real misunderstanding of the post-pandemic talent landscape. Modern premium is defined by employee retention, mental health support, and a real demonstrable investment in your people. The Holborn amenities, the massages, the socials, the yoga, they aren't fluff. They address fundamental needs for work-life balance. And let's talk about that period property designation. Sure, it offers charm, but it almost always means higher maintenance, less adaptability for tech, and real restrictions on things like efficient HVAC and data infrastructure. The newly refurbished Holborn space just avoids all of that.
That's a fair structural point about period properties.
However, the certainty of the Mayfair location, it speaks to an institutional audience that values stability over adaptation. I mean, when a client is flying in for a critical meeting, they need an address that is globally recognized and logistically flawless. The stability of a W1 postcode is a risk mitigator in itself.
My concern with that, though, is its rigidity. The Holborn space provides essential, scalable flexibility. It offers private offices, co-working space, hot desks, all on flexible terms. This agility is absolutely crucial for startups and scaling companies who need to adapt their footprint without being, shackled by the 5- or 10-year leases typical of a high-end Mayfair location. That kind of rigidity is a liability in a dynamic market.
I'm not entirely convinced that the Mayfair listing implies rigidity. The material specifies it's suitable for small startups to larger companies. But crucially, a serious enterprise requires the dedicated corporate identity that comes with a prestigious address and a formal staffed reception. That's something that often feels, diluted or impersonal in a sprawling co-working complex. You need an identity you can present to global investors. W1J8BD represents permanence.
And permanence is often prohibitively costly when you compare it to maximized utility. So let's move to the money, the price difference, because this is where the argument really comes into focus.
Agreed. The £90 per month difference, $450 versus $360, is simply the cost of superior, immutable location. The listing highlights excellent links with Piccadilly Circus, Bond Street, Oxford Circus, and Green Park. This logistical advantage for high-value meetings, for C-suite access, it just can't be replicated by being near Holborn and Chancery Lane, however convenient they are. The premium secures market access.
But that ignores the total operational expenditure. You're framing that £90 is paying for status, but what does that status actually buy you? I mean, Holborn is also a thriving business hub. The critical difference is that the package of included services in Holborn, the wellness, the food, the socials, it effectively shifts significant costs from the tenant's external budget right into the rental fee. It dramatically lowers the true cost of doing business.
Can you quantify that?
Absolutely. If a company in Mayfair wants to provide weekly breakfasts and monthly massages, which are becoming standard expectations, they'd have to source and pay for all that externally. That's staff time, vendor contracts, external spending that easily totals more than £90 per employee per month. You figure even a conservative £50 for catering and $40 for wellness, you've already erased the price gap, and that's not even accounting for the management time saved. Holborn bundles utility and value. It's a better ROI.
That calculation is seductive, but it makes a huge assumption that every company needs or benefits equally from those specific amenities. The core value of the Mayfair location is that it enhances the business itself. For, say, a high-end law firm or a financial institution, the address is the primary marketing tool. You don't need free yoga when your location signals you're established, permanent, and successful. That value is embedded in the street name itself.
The resilience of a prime asset is a critical point. I'll grant you that. But your argument is built on a legacy perception of value. The Holborn model is focused on sustainable growth. I mean, if a small firm is paying $450 a desk in Mayfair, but their staff attrition is high because they lack modern comforts, the cost of that churn, recruiting, training, lost productivity, will rapidly dwarf the extra rent they're paying for prestige.
I see why you emphasize that agility, but there's a maturity curve to this. While flexibility is attractive for growth stage businesses, once a company reaches institutional scale, that Mayfair stability becomes a governance requirement. The period property, with its inherent difficulty to adapt, paradoxically suggests a level of commitment that reassures institutional partners. The Holborn space, for all its convenience, might always carry the perception of being transient.
But that stability comes with significant liquidity risk for the tenant. The difficulty in offloading a traditional long-term lease in a fluid market is a major drawback. The Holborn model addresses that head-on. You can scale up or down based on genuine business need. We're seeing a move away from real estate as a commitment to real estate as a service, and Holborn is positioned perfectly for that.
Ultimately, while I do acknowledge the appeal of operational agility and, yes, the measurable benefits of employee wellness, especially for scaling companies,
The material on the Mayfair property demonstrates that true, long-term, non-depreciating value remains rooted in immutable prestige, in historical significance, and an unmatched location, the links to Piccadilly Circus, Bond Street, that defines a logistical superiority that just transcends internal office trends.
And conversely, I think the material illustrates a profound shift in corporate strategy. The Holborn listing proves that contemporary businesses prioritize employee welfare, they prioritize operational flexibility through co-working and hot desks, and they want cost-effective, high-spec interiors. The tangible value delivered at that £360 price point fundamentally challenges the necessity of paying a premium just for a historical address.
So this comparison really highlights two equally valid yet fundamentally opposed strategies for defining premium office space, based entirely on different definitions of what an asset is. Is it the external symbol of success or the internal mechanism of productivity?
Exactly. And it leaves us to weigh whether that historic symbol or the modern service model offers the greater strategic advantage in today's commercial landscape. And there is clearly much more to explore in how these contrasting values play out in the broader market.